Good morning and welcome to today's webcast, Higher Education, Accounting and Auditing Update. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement, or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters from Moss Adams' Higher Education Practice, Tammy Erickson, Partner, and Arthur No, Senior Manager. With that, I'll turn it over to Tammy to get us started.
Great. Thank you, Pam. Good morning, everyone. I hope you're all doing well today. We have a full agenda for you, so we will try to go through this as quickly as we can so that we can get through the materials on time. You can see the agenda here. We will be talking about the deferral of some standards. Also, we will be talking about the new financial responsibility requirements that Department of Ed issued in November of 2019. We will also be talking a bit about single audits and some things to expect this year. And we'll also talk a little bit about COVID-19 and just the potential impact that that may have on your accounting for funding as well as the audits that will be taking place. So at the end of this session, you should be able to hopefully understand what the deferral dates are for certain standards, also identify what changes were made to the financial responsibility requirements by the U.S. Department of Education, be able to evaluate the impacts of those financial responsibility requirements to your financial statements, also any supplemental schedules, and also have an increased understanding of the COVID-19 implications. So before we start, we do want to ask a polling question. We have several polling questions. There are 4 throughout the presentation. And that is something that if you do want CPE credit, you will have to answer at least 3 of the 4 polling questions throughout the presentation. So we will take a few moments here, give you time to respond. Go ahead and click the button to answer to the answer that you choose, and then you can hit submit. Don't forget to hit submit when you click on that. Also, for those of you that would like a copy of today's slide deck, you can download them from the folder that says Slide Deck and Handouts to the right side of the slide view. And we will also be sending out those slides via email after the webcast, but you can download them here from the screen here. And once you have completed all the CPE requirements, you will be able to download a PDF for your CPE certificate from the CPE progress window to the right of the slide view. I think we can just give it a few more seconds here for people to answer the question here as far as what type of institution you represent, and then we'll be able to see the answer. So again, go ahead and select A, B, or C, and then hit Submit. Okay, I think we can click, here we go. All right, so it looks like we have almost half of those attending are private institutions, and then we have about 40% that are public, and then about 14.5% that are just others that are joining the webcast today. Thank you, we appreciate that information. Okay, so we will go ahead and get started here. So we have a quick FASB update for you as well as a GASB update, since we do have both private and public institutions on the line. As far as FASB goes, there was the Accounting Standards Update number 2020-05 that was just recently issued, and that is delaying the effective dates for Topic 606, which is your revenue from contracts with customers, or also known as the Revenue Recognition Standard, as well as the lease standard, which is Topic 842. So for Topic 606, or the Revenue Recognition Standard, for public business entities and not-for-profit organizations with conduit or publicly traded or listed securities, as well as benefit plans that file statements with the SEC, those reporting periods have come and gone. So basically, any financial statements with a year end of December 31st, 2018, or through your June 30th, 19, those entities have already adopted this standard in most cases. And so there is no delay for those entities. For all other reporting entities, that standard was originally effective for reporting periods beginning after December 15th, 2018. So in most cases, that would be for those with the June 30th, 2020 year end, which is just a few days away. And that has been delayed for a year. So you now have an additional year, and that would then be effective for your June 30th, 2021 year ends. For leases, Topic 842, the entities that have conduit or publicly traded or listed securities, that was effective for years beginning after December 15th, 2018, or what would have been June 30th, 2020 year ends. That has been extended through June 30th, 2021 for anyone who has not yet issued those financial statements. For all other entities, the original due date of this effective date was for fiscal years beginning after December 15th, 2019. That was extended in Accounting Standard Update 2019-10, and it was an extended 1 year. And now with ASU 2020-05, that has been extended another year. So for all other reporting entities, it is for fiscal years beginning after December 15th, 2021. And so that would really be for your June 30th, 2023 year end. So leases is one of those standards that I feel like we've been talking about that for, gosh, probably about 10 years. And here we go. We're still talking about it and still delaying it. So just be aware of that. You do have a little bit of extra time for that standard. And this was really done due to COVID-19. FASB and GASB have recognized that there are a lot of institutions and just entities that are really trying to deal with what's happening and with the COVID-19 and the impact on financial statements, and so have delayed these standards to give organizations a reprieve from having to deal with implementing standards on top of everything else. So that's on the FASB side. On the GASB side, they've done something very similar. GASB did issue GASB 95, which is postponing the effective dates of certain guidance, and that is effective immediately. GASB did shorten their comment period so they could issue this as soon as possible. And you have a list here of the various statements that have been delayed. Most of these are delayed by 1 year, with the exception of leases. GASB did give 18 months on the lease standard, as well as the implementation guide that relates to leases. All the other standards, those are delayed by 1 year. Something else to realize here is with Statement 84 with fiduciary activities, as many of you know, there's been, that are on the public side, there's been a lot of discussion about defined contribution plans and, whether or not those really would fall under GASB 84 and if those would have to be included. And I just noticed this morning, GASB just posted to their website this morning that they've just issued GASB 97, which is effective immediately. And what that's doing is, as you know, under certain circumstances, there is a financial burden on the government that's used to determine whether a legally separate entity should be incorporated into the government's financial statements. And so GASB's looked at kind of the cost benefit of defined contribution plans and whether they should be included as a fiduciary fund in the statements. And in Statement 97, the board has decided to limit the application of the financial burden criterion regarding contributions to post-employment benefit plans to only defined benefit pension plans and defined benefit OPEB plans that are administered through trusts. Prior standards had presumed that Section 457 plans were not pension plans and therefore were not subject to pension plan reporting requirements. Under Statement 97, however, Section 457 plans should be classified as either a pension plan or other employee benefit plan, depending on whether the plan meets the definition of a pension plan. And it clarifies that Statement 84, as amended, should be applied to all arrangements organized under IRC Section 457 to determine whether those arrangements should be reported as a fiduciary activity. So they did rush that standard through as well, but that is a late breaking news for everyone. These are other standards that were delayed based upon GASB 95. Statement 89, as you know, that is where You will no longer be capitalizing interest as part of a construction period. Statement 90 is related to majority equity interests and provides guidance for governments that are holding an equity interest and whether or not that meets the definition of an investment and how that should be accounted for. Statement 91 related to conduit debt obligations provides some basically a single method of reporting for conduit debt. Statement 92 is just a variety of topics that are all thrown into one standard to improve the consistency. And then Statement 93 is there's several governmental organizations that use the interbank offered rates as a variable rate for their payments. And as a result of the global reference rate reform, this is providing a way to transition away from the interbank offered rates. So that is a quick update on the delays on the standards that have come out, which I know is a great reprieve for everyone, especially in light of all that you are all dealing with right now. So with that, we are going to do another polling question. And this one was really a way for us to jump into our next topic here. And our question is whether or not you feel ready for the new financial responsibility requirements. Again, go ahead and answer either A, B, or C, and hit that submit button. And we'll give a few seconds here for everyone to answer that. And again, you will need to answer at least 3 of the 4 polling questions throughout the presentation in order to receive the CPE credit. Also, if you do have questions, as you know, you can go ahead and submit your questions, and we can try to get to those during the presentation if we have time. If not, we will work at responding to your questions and getting back to you about those after the presentation. Okay, we'll go ahead and close the poll here. So it looks like just about 50% of you are ready for the new financial responsibility requirements, 35% of you, about 36 are not, and some of you are going, what requirements are you talking about? So with that, I will turn it over to Arthur, and he will go through those for you.
Thank you, Tammy. So for this next section, we will talk about the new financial responsibility requirements. We'll take a deeper dive into the formulas and its impact on the financial statements and disclosures this year. So with this, there are 3 key ratios that are calculated. It's weighted and it's combined into a composite score. These ratios are important because it measures whether or not the organization has adequate resources to provide education and to guard against precipitous closures. These ratios are calculated they're only applicable to not-for-profits and proprietary higher education institutions, and they do not apply to public institutions. I think there were 37% of you that responded that you're with a public institution, so this section is not applicable to you. So for the ones that do have to follow these standards, there are 3 ratios that are calculated. The first one's the primary reserve ratio. This measures if the institution has financial resources to support its mission. Are their financial reserves sufficient to meet current and future commitments, is the question that it's asking. The equity ratio, it measures the amount of total resources financed by contributions and accumulated earnings. And then lastly, the last ratio is the net income ratio. It measures the institution's profitability. It determines whether or not the institution has the ability to manage its resources. It's operating within its means. This slide is an illustration of the composite score. It's taken straight from the NACUBO advisory report. So at the bottom, you'll see the composite score. You'll take the weighted average of the three different ratios that I discussed earlier, the primary reserve ratio, the equity reserve ratio, and the net income ratio. The weight, it's different for not-for-profits versus proprietary institutions, but we'll cover that in the next couple slides. So this slide, it talks about the composite score distribution. If you're within the 1.5 to 3.0 range, your institution is considered within the passing range. If you're within the 1.0 to 1.4 range, you're in the zone alternative. And then lastly, if you're within the -1 to 0.9, your institution is considered failing. And this is based on a composite score. So what are the impacts if you are either in the zone alternative or failing for the composite score ratio? So if you're within the zone alternative, there's enhanced monitoring by the Department of Education and then special disbursement requirements. If you fall within this bucket, you'll remain within this bucket for at least 3 years. Lastly, if you're failing, you must provide the U.S. Department of Education with a letter of credit for at least 10% of prior year Title IV funds. So why did the U.S. Department of Education change the way that institutions are calculating the ratios? The primary driver is because of ASU updates or the accounting standard updates. All of you, or all the not-for-profits, should have implemented 2016-14 last year. This was the presentation of the financial statements. Remember, the net assets is no longer presented as unrestricted, temp restricted, and perm restricted. Now it's classified as net assets with donor restrictions or net assets without donor restrictions. And also, it also considers the lease standards. So the ratios are updated to reflect those two updates. So the first ratio that we'll cover is the primary reserve ratio. At the front of the slide, you'll see that the weight for proprietary institutions is 30% versus for a not-for-profit, the weight for this one is 40%. So the key changes to the way that's calculated for the expendable net assets, before we would take unrestricted net assets, your temporary restricted net assets, but now for this new update, what they changed is for the 2016-14 net assets, now it's called net assets without donor restrictions and then net assets with donor restrictions. So when you calculate this, when you take your net assets with donor restrictions, you need to back out the amount that you used to call perm restricted. You should be able to pull this amount from your footnote disclosure. So you'll take from the front of the financial statements your net assets with donor restrictions and then back out your perm restricted net assets. This calculation also includes defined pension liabilities. So that's also another update to the expendable net asset number. The next couple of slides, or next two slides, talks about some classification terms. The thing to note for this one is that your annuities, term endowments, and life income funds with donor restrictions are subtracted, and they must be separately disclosed and cross-referenced to the supplemental schedule, which shows how the financial ratios are calculated. Also with this, for the related party transactions, it's the related parties that are subject to topic 850. So if you do have related parties that fall within the scope, you need to make sure it's included as part of the calculation. For long-term debt, it's been updated to reflect the changes for the lease standards. For the next line item is the total expense, which is the denominator. The update here is that all expenses and losses without donor restrictions, you take out any net losses from investments or any expenses related to post-employment or defined pension plans or annuities. So if there's a negative change in any of those liabilities, you do not include that as part of your total expense. And the next slide will summarize those changes. So if you have any net investment gains or net investment losses, you do not include that as part of your expenses. Same thing for the pension liabilities or your annuities. If there's a loss, you do not include that as part of the calculation. For the equity ratio, the weight here is similar for both proprietary and not-for-profits. It's 40% for both. And this one's pretty straightforward. It was updated for ASU 2016-14. Before it was net assets, unrestricted net assets and temporary restricted net assets. Now it's net assets with and without donor restrictions. So it's just an update for ASU 2016-14. The last ratio, the net income ratio, it's 30% for proprietary institutions and then 20% for not-for-profits. The key change here is that the unrestricted net assets, it's no longer net assets, or now it's now net assets without donor restrictions. Also, there's been some updates to the way that total revenue is calculated, and we'll cover that in the next slide. So if your organization has investments, gain, and losses presented as separate line items, you would need to net those two numbers to determine whether or not you have an investment gain or an investment loss. Earlier we talked about investment losses, so if you do have an investment loss or a net investment loss, you do not include that as part of your total expenses. However, if you have a net investment gain, you'll include that as part of total revenue. So that was the update for total revenue. This is very similar to what we saw in the last couple of slides. It summarizes how you calculate total expenses and total revenues. Again, for your net investment losses, don't include that, but you do include your net investment gains as part of revenue. So some of the things to get ready for these changes to the financial ratios. I don't know if all of you met with your current auditors, but it's a good idea to get in front of this and meet with them to determine how this will impact your financial statements. There's additional disclosures that are required. We'll have additional schedules in the financial statement, so making sure you set up time with your auditors to determine how they may impact the financial statement presentation or the supplemental information. So the next couple of slides, we'll talk about the supplemental schedules and disclosures and how that will change with these new financial responsibility ratios. So the Department of Education, they didn't provide or they didn't define where these schedules should fall within the financial statements. Our initial thoughts is that it should be included with the supplementary information. So similar to where you present currently your CFA, so it's in the back with the supplemental information is where we think these new schedules should be presented. And then the next couple slides will kind of cover what these new schedules will look like. So the supplemental information, what you need to present is that you need to present the elements that are used to calculate the different ratios. So you'll see a breakout of different line items, and you'll see where you can find the information, whether it's the front of the financial statements, it'll reference the page number, whether it's the footnote disclosure or reference the footnote that you could find that. So making sure it's very clear that the U.S. Department of Education could trace back the different elements that are used to calculate the financial ratios. So these are just the examples, like for the primary reserve ratio. It talks about the net assets without donor restrictions, with donor restrictions, the related party transactions. It shows you where you can find it in the statement of net position. It references the page number that you can find it at, dollar amount. Talks about fixed assets, where you can find those numbers. So the next couple slides just kind of shows an example of what these new schedules will look like. Again, I will work with your auditors to determine where these schedules will fall within your financial statements, but I think it makes the most sense to put these in that supplementary information. So make sure that you set up time to make sure that the financial statements are updated to include these new schedules. This slide, it talks about the Q&A that was issued that you can find on the IFAP website. It talks about the question and answers related to these new financial responsibility ratios. The effective date for this regulation is July, for any entity that files or submits an easy audit on July 1st, 2020, on or after July 1st, 2020, so applies to all the institutions this year. It also talks about other questions and answers. If you want to take a closer look at what the questions and answers are, feel free to reach out to me afterwards, and I can provide you a link to the IFAP website with these Q&As. So with the update to the financial responsibility ratios, they also talked about the different borrowing defense triggers, and there's been updates to that as well. So there's the mandatory triggers and there's discretionary triggers, and then we'll also talk about the 10-day reporting window. So there's certain events, if you do have them, that will be considered mandatory triggers. So if you have any liabilities that result from litigation, a settlement, final judgment, you'll need to make sure you report this to the Department of Education within 10 days. These are considered mandatory triggers. If you have a withdrawal of owner equity from a proprietary institution and your composite score is below 1.5, you'll need to report this to the U.S. Department of Education. Lastly, if you do have two or more discretionary triggers, these events are considered mandatory triggers if you have two or more, and then you'll need to also report these to the U.S. Department of Education. So when you do have a mandatory trigger, and when you report it to the U.S. Department of Education, they'll recalculate your composite score automatically because of this. There is also discretionary triggers. Below the list, or on the slide, is a list of these discretionary triggers. They include any accreditation issues, violations of security or loan agreements with creditors, any violations with state licensing or authorizing agencies, if there's a high annual dropout rate, and then within the 2 most recent years of official cohort, the default rates are 30% or more. This will be considered a discretionary trigger. So these are required to be reported to the U.S. Department of Education within 10 days, but with these discretionary triggers, the composite score isn't automatically calculated like the mandatory triggers. So this slide talks about the 10-day notification period. So the clock starts when you discover the event or the triggering event. So you need to make sure that there's a process in place to report these triggers to the U.S. Department of Education. Some of the things that you want to make sure is to create a task force or some type of control, implement some type of control to make sure that you are reporting these triggering events to the U.S. Department of Education in a timely manner. So some of the things that you could do to prepare for these changes. So make sure that the institution is educated on what these different triggering events are, so that in case you do run into these events, that you notify the U.S. Department of Education within a timely manner. Again, the auditors aren't responsible for monitoring the institution's triggering events, so you got to make sure that you have the controls in place to identify these events and to report these events in a timely manner. With that, this is the next polling question. Did your institution receive funding to cover COVID-19? And we'll give you a few seconds to answer this next polling question. To participate, please click on the button next to the answer and choose your answer and hit submit. Again, once you've completed all the CPE requirements, you'll be able to download a PDF of your CPE certification from the CPE progress window that's right of the slide view. So we'll give it a few more seconds and we'll go over the response. And again, a reminder for any of those that want a copy of today's slide deck, you could download them from a folder that says slide deck and handout. It's to the right of the slide window. We'll also be sending out slides via email after the webcast. All right. It looks like 71.8% of the audience answered yes, and then 28.2% answered no. So with that, I'll turn it over to Tammy to cover the next section.
Great, thank you, Arthur. Okay, well, it looks like this next section will be applicable to the majority of you. We do have some slides here to just talk a bit about COVID-19 and the impact that that will have on your accounting for that, as well as just some things that you should be considering as you either just, I know that there are some of you with some May 31st year ends, some with June year ends, and so some things that you should be considering as you're preparing for your audits. First of all is the accounting treatment for those funds. There are a lot of different types of funds that are out there. There are the PPP loans that not all institutions were able to get, because typically you had to have less than 500 employees in order to qualify for those loans. But there are institutions out there that do meet that and receive those loans. And so there is some guidance that has been issued by FASB. There's a technical Q&A that was issued. And for the most part, what FASB is saying is that these should be accounted for as a loan, since it is in a legal form, it is debt. However, there are some that believe that it's a government grant. FASB has come out and basically has said that this should be accounted for as debt until you do know, or you have enough information that supports that loan will be forgiven. You are not supposed to impute interest as the amounts are, the loan is from a governmental agency. But you should be recording that as a loan, and then when you derecognize the liability, if you do qualify for forgiveness of that loan, that it would fall under FASB it's 470-50-15-4 when you do account for that. GASB does have some proposed guidance that is in proposed technical bulletin number 2020. That is something that they are trying to expedite as well. There's been a lot of questions as well as far as just the accounting treatment for funds. Should those funds be considered operating or non-operating? So there's just a lot of questions out there that we do encourage you to be talking to your auditors in advance about those and make sure that everybody gets on the same page with those questions. There have been discussion of whether it's considered extraordinary. So far, it does not believe, we do not believe that it's going to meet the definition of an extraordinary funding or expenses. So again, just a lot of questions there. Something else that you should be considering and documenting for your audits is your internal controls. A lot of businesses have been impacted in a lot of ways, primarily with individuals working from home. And so you should be documenting how have controls changed during this period where individuals may be working from home, and therefore controls may be different than what they were prior to the pandemic happening. Going concern is something else that should be considered. As you know, the standards require that you assess your organization's ability to continue as a going concern, and that is for 1 year after the financial statements are issued. So it's not a year after your year end, but it's after the financial statements are issued. And so that is something that you should be documenting your consideration, especially in light of the pandemic and how that has impacted your organization, and whether or not you do have any going concern issues that may need to be disclosed within the financial statements. Disclosures is another area that you should be considering. You may have disclosures related to going concern, as I mentioned. We are seeing most organizations are including a subsequent event footnotes for those that are a December 31st year end. For most of you, the pandemic has hit during your current fiscal year that will be under audit, and so you may have some additional disclosures related to that. And then debt covenants is another area that should be considered. Oftentimes, debt covenants will specify that no new loans can be taken out by the organization without prior approval from the bank. And so if you received a PPP loan, are you then potentially out of compliance with that debt covenant if you did not get prior approval? So those are some of the things that will need to be considered as you're preparing for your audits and your fiscal year end. Some other challenges that have to do with COVID-19 and the single audit. Certainly the timing of the pandemic has really impacted the single audits. The compliance supplement for 2020 has not yet been issued. So that is certainly something that may delay the single audits. Auditors do not have the guidance that they're supposed to have to perform those single audits at this time, and so we're still waiting for that guidance. OMB was getting close to sending in the compliance supplement for review when the pandemic hit, and there were several federal agencies that requested additional time to complete that compliance supplement, and so we're not sure when that will come out. When it does get issued, we have been hearing that there will not yet be guidance related to funding for COVID-19, and that may come out later as a supplement to the compliance supplement. And so it's possible that your single audits may be delayed if you did receive funding that falls under the uniform guidance. However, OMB has not yet provided the guidance for auditing those funds. There's a lot of information out there. We've been trying to keep our clients informed as to what's happening. We do have a web page that is specifically related to COVID-19. We have that towards the end of the slides, but something that you may find useful. The AICPA's Government Audit Quality Center also issued a comprehensive letter to OMB summarizing key issues and questions that they feel need to be resolved for auditors to be able to complete audits related to the single audit. And that letter was issued back in April, and some of the key points were just whether various emergency funds and programs are subject to the uniform guidance, and if they are, what are the CFDA numbers for those, and also suggestions to the OMB on how the compliance supplement should be revised to address COVID-19 matters. OMB has issued a couple of memos. They issued memo M20-17. That memo is now expired. That memo had extended the single audit extension, which is normally 9 months after a year end. But because that memo expired, OMB just issued late last week memo M20-26. You can Google that and find information about that. But the good news is that they did an extension. It's 3 months now. It's broad-based and does not require federal agencies to take any other action for that extension. There is a requirement, however, that entities maintain documentation on file that includes the reasons for the delay in their filing. And so if you do end up needing that extension, then you should retain documentation related to that extension and why you felt that you needed that. That memo also makes the awarding agencies aware that they have to inform recipients to exhaust other available funding sources to sustain workforces and implement necessary steps to save their overall operational costs, such as rent, renegotiations, that type of thing, because they want organizations to use other funds before they're using federal funds. So you should be retaining documentation of efforts that you've used to exhaust other funding sources and to reduce overall operational costs, such as rent renegotiations. It also talks about kind of the double dipping, that you cannot use these federal funds for expenses that you may have used other federal funds for. So you need to make sure that you're using just the federal funds one time, and that you're not using two different sources for the same expense. again, the memo does, it retracts the original 6-month audit extension that was in the original memo that was provided for June 30th, 2020 year ends. GAQC has confirmed with OMB personnel that even though you have to read the memo several times to understand this, it is OMB's intent to retract the 6-month submission, and that it is now a 3-month extension under the new memo. So audits that had a normal due date of July 31st, 2020 through September 30th, 2020 will now have an extension of up to 3 months beyond that normal due date. So that's, so for example, a December 31st, 2019 year end, for which the report is not issued, would normally have a due date of September 30th, 2020. They now have an additional 3 months to December 31st, 2020. The memo itself does expire, I believe, on September 30th, 2020. So that's something that you will want to watch for if there are any new additional memos that come out once that memo does expire. So here's some examples of programs where there is some uncertainty. There are several different types of funding programs that have come out that we don't know whether or not they will fall under the uniform guidance. We do, however, know that there are programs in which the uniform guidance does apply. So there are some funding and certification agreements that do cite uniform guidance applicability. And so we've listed under the Education Stabilization Fund, which is, I believe, probably the funds that most of you have received. We have the related CFDA numbers related to those funds for applicability to your CFA this year. But again, we still don't have the compliance supplement that would provide guidance. So for now, you should be reading through information that you can find related to these funds, and make sure that you are addressing your internal controls for staying in compliance with that funding under the uniform guidance, as well as the allowability of those expenses, et cetera. We do have some examples where there could be a split decision. We're still waiting to see something in writing that's some official guidance, but SBA has informed us that the PPP loans are not subject to the single audit. However, we've also heard that loans provided to not-for-profits under the Economic Injury Disaster Loan are direct loans from SBA, and therefore they are considered federal financial assistance and subject to single audit. So there are loans out there and funding that we are, again, still waiting for some guidance. Just one other couple other minor things. The Gramm-Leach-Bliley Act does continue to be enforced. Department of Education has issued a memo related to enforcement of cybersecurity requirements under the GLBA. There's a couple of Dear Colleague letters, so I encourage you to look at those and be sure that you are documenting controls and compliance with GLBA. That is something that OMB started putting in Department of Ed in the compliance supplement when it comes to auditing a student financial assistance cluster. That auditors do have to look at GLBA compliance. For public institutions, procurement, with the uniform guidance, there are some changes that have been proposed to the federal acquisition regulations to increase micro-purchase and simplified acquisition thresholds. Before you had that $3,500, there is a proposal to increase that to $10,000. So that's something that we're still watching out for. So that concludes our topics there. We do have our last polling question here, so you can make sure that you get your credit. So we're just curious as to what your institution is planning for this fall when it comes to classes. Will you be online only? Are you going to go back to in-person classroom, or a combination of online and in-person? Or I know that there are some on the call that do not belong to an institution, and this may not be applicable. Whoops, I'm sorry. I think I moved that too quick, and I don't know. Pam, is there something we can do there?
No worries, Tammy. Yeah, we unfortunately can't go back, but hopefully, yeah. I think, you know, as long as we kind of left it open for a little bit. Just if anyone has any issues, just let us know.
Yeah, sorry about that. Was a little sensitive there. So it looks like most institutions are doing a combination of online and in-person, which is what we've been hearing as I've been talking to my higher ed clients, that most of them are looking at doing a combination of those online and as well as in-person classes. So with that, we just have a couple of minutes left. We do have, there is a question here about whether we can circle back to GASB 97 and clarify the statement about defined benefit plans. And that was with GASB 97, defined benefit plans are still in scope with GASB 84. So as long as you follow or fall within the original criteria of GASB 84, the defined benefit plans are still within scope of that. It's really what they were looking at is the defined contribution plans and the cost benefit of those plans. We do have some additional information here for you. There's our contact information. Please feel free to reach out to either one of us if you have additional questions. If there are questions here, we will respond to those as well. And as I mentioned before, we do have some resources here that you can feel free to go to our website. We have a lot of information about COVID-19 and various resources about accounting. We can help with PPP loans and asking for that forgiveness. There's just a plethora of information. So I really encourage you to go and at least look through that. There's pretty much something for everyone there. We also have information about upcoming webcasts. We have general as well as industry-specific newsletters, articles, and alerts. You can sign up for our RSS feeds and also subscribe to any content that we can send out to you if you'd like as well. Here's a little bit of information that is related to COVID-19, some articles, alerts, as well as other information that you can get from our website. You can click on those links and obtain that information. Again, there's quite a bit of information there. So want to thank everybody for your time this morning and for joining us. I hope everybody, we have a beautiful day here, so I hope you all do as well. And thank you again. I hope you take care and stay safe and healthy. Thanks for your time. Bye.
Thank you, Tammy and Arthur, for a great presentation today. Just a reminder, if you attended today's presentation in a group and would like to receive CTE credit, you must complete the group attendance sheet found in the slide deck and handouts window to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CTE progress window to the right of the slide view. I'll keep the webcast console open for a few minutes to give you time to download your CTE certificate. A copy of your certificate will be emailed within 3 weeks should you have any difficulty downloading it now. And finally, here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you again for joining us, and we hope you'll join us again next time.